Hey folks, it's your rich uncle here. Now, something I hear all the time from investors is they're trying to pick a place to invest based on taxes. And I get it. Taxes are important. If you break down how you're making money and your profit and loss statement, taxes can be a big line item. But do not overemphasize the taxes. And we're going to be going over the taxes through several states. You're going to be learning what are the best ones for tax. But what I'm going to want to really do is kind of dig in and say, well, even though these are ranked top 5, these are the reasons why not really to put so much thought and effort into it. Again, taxes are just one part of this whole equation. Now, I think something that's good to accompany this is the rental property analyzer that you guys can download on my website for free at SimplePassiveCashflow.com/analyzers. You don't know how to use it, you're not too good with spreadsheets, well, we've got a freaking video made for you. You can check out on that webpage. Again, go to SimplePassiveCashflow.com/analyzer. But let's get into the taxes here. So I've got up this WalletHub.com webpage, property taxes by state. This one's been updated March of 2022, and these guys will update this every so often. And I think they do a pretty good job. What they don't do is adding the commentary, which I'm going to be doing right now. But let's just go in like how most people do this, right? They rank these things by, let's just first go by the effective real estate tax rate. So what this is doing is putting in like, or what is the percentage that these people are paying in taxes? And I think this is the wrong way to do it. So like, I mean, we invested in Alabama. Alabama was actually the place where I bought my first few out-of-state rental properties. And I still think it's a great area to invest. Huntsville, Birmingham. A great way to get started for a lot of you guys buying little rental properties, non-accredited investors. Now, just because a property or a state is very low on taxes in terms of this effective rate, now what I want to illustrate is like the property values there are super low. So this effective tax rate is more of a percentage off of the kind of the median home. If your property values are super high, like in Hawaii, well, it's going to skew your numbers the other way. So if a dummy just kind of looked at this table, and I'm telling you, don't be this dummy. Don't just say, oh, Hawaii has the best taxes, let me invest in Hawaii. No, you need to kind of look at it from two perspectives. And the perspective I want to show you is like what I'm trying to find is like which of these states have the best combination of the two. So, like Louisiana, not quite the best state to invest in, and just like kind of like Mississippi too. I don't know. Let me see where Mississippi is. Mississippi is actually coming in at a kind of a moderate, middle of the tier 0.8881%. That's because their home values aren't worth jack. They're so low here. If they were kind of up to where some other state should be, around the 200,000, this would be a lot higher. And that's kind of the point I'm trying to make here. Now I'm going to kind of go down this list and kind of pick out some outliers that I've seen. I'm going to first sort this one and then sort the annual taxes on a regular home. Actually, let me do this right now. So I'm going to sort it per a regular home. Here, what house can you get in Hawaii it's a regular home? And this is kind of where Hawaii, which is a great example, very high home values, seemingly low tax rate, but at the end of the day, you're paying a lot of taxes based on a regular house, $1,700. Where that regular house in, where was it? Alabama was the low one. They're actually $587 per house. So Alabama and Hawaii, I mean, they're kind of two great outlier examples to illustrate what I'm trying to show here. So if I look at it from a case of just a regular home, $200,000 home, again, like I think if you're buying your first rental property, you want to kind of focus on 80% of the median price. So what that means is, like, let's just say it's 2022. I've kind of lost touch of what single family homes are selling for these days, as there is a big range. But take a place like Alabama. Let's just say the median home price is about $140,000. Let's call it $130,000. Now, 80% of $130,000 or 80% of $130,000. I'm going to do the math real quick. So I went $140,000 times 0.8. That's about $110,000 as kind of the ideal target to kind of be around to pick up those tenants that, you know, just below the threshold of kind of an average house out there. Or if you will, maybe think of like a starter home price. And in Alabama, that would be around $100,000 at this point in time. Again, this changes a lot, right? And this is why I try, when I teach this stuff, I try and speak in terms of generalities. But yeah, you know, so actually I'm right. $140,000 is the median home price. But let's just go off of a, you know, rental property that you'd be looking for would be around $110,000. While we're kind of on this topic, don't make the mistake of, you know, buying a $60,000 piece of junk that supposedly rents for $900, $950. This stuff never happens. Don't fall for all these people trying to sell you these turnkey rentals. That stuff doesn't happen. I mean, you might collect the $900 rents for a little bit, but you're just going to have so much problems with this tenant, and that property just isn't going to appreciate. And this is a piece of junk property that you're not going to see that appreciation go up. Whereas if you get on that shelf of at least $100,000 in Birmingham or Alabama here, you're going to start to see that property appreciate. And in these rental properties, my whole thing is to buy the property and then eventually sell it maybe in 3 to 10 years before that big CapEx wave hits you, and to kind of move off to easier and better assets, you know, especially more value add syndications down the road. But back to the taxes here. So they're saying, you know, some of the worst places are New Jersey, Illinois. I mean, a lot of these are places up in the Northeast. Obviously not really places to invest for cash flow. Now, one thing here, like, so Texas is always one of those states that a lot of people will say, well, good taxes situation. Texas has been really aggressive on the property taxes. They may not have income tax there, which is a good thing. But, you know, you have to bring these things in combo. And off the top of my head, the things that you have to kind of, you know, when you're comparing different states or locations to invest is the property taxes, the insurance costs, and then your income tax in that state. Those are kind of the three things. So what I'm saying is, don't be a bonehead and just kind of focus in on the property tax. Sure, that's very documented and you can look up these information pretty easily, but don't lose sight of the other two. You know, for example, like Florida. Florida is known for no income tax. And, you know, I've seen a lot of unsophisticated investors just invest in Florida because they hear some good things about it, and they latch on to this idea that there's no income tax in Florida and it's a good place for why people are moving there. And it's like, well, that's right, but that's only one thing of a gazillion things for reasons why people are moving to Florida, would want to move to Florida. So most times when people tell me this stuff, I just kind of nod my head. If they're not a paying client, look, you can do whatever you want. But what I'm teaching you guys on this channel is to think more holistically about it. Think about, again, the bigger picture, which is the combination of the taxes, the income tax, and the insurance premiums. In Florida, you're going to get killed with insurance premiums. It might be double, triple what you pay in another state. And that's what you have to really kind of think holistically, and then put these three in the bigger analyzer, right? And the whole expense line items that make up your rental property, and think of this holistically. Don't just think of it myopically, looking at the property taxes. So let me sort this, you know, median home value, you know, this has really nothing to do with taxes, but, you know, these states like Mississippi, West Virginia, Arkansas. I mean, Arkansas is not too bad, but if you're in the Little Rock area, you know, that has showing signs of life here. But, you know, Mississippi and West Virginia kind of suck because there's not really any job growth and population growth. And that's the biggest thing to look at. And this is what frustrates me about newer investors. They key in on these silly things such as property tax and, you know, insurance premiums, how much they cost in a certain area. And it impacts the bottom line. But the biggest thing is, where are people freaking moving to, and where are rents increasing? And they are not really increasing in Mississippi. or West Virginia. And that should be put on the forefront, maybe 5-10 times a bigger factor if you're one of those geeks that make these decision analysis where you're weighting different options. Or just go download the Analyzer and play around with the numbers yourself, and you'll get a feel for how little of the impact the taxes and the income tax really play into this equation. To me, I think this last column is a big important one. This is the annual taxes on a median price home. So, you're going to be buying something a little bit below medium, but let's just, medium is, at least you're not comparing $1 million, $2 million houses on this scale. But, Alabama's this is kind of a composite, I gotta believe, between the median home price and then the taxes. All they're doing is doing the math for you. And where they're taking the 0.4% and multiplying that by $142,000 into this, and to get this number. And I think this is actually a good indicator of really which one has the lower taxes. Here, Alabama comes up to the top, and a lot of these kind of southern states also rise up to the top. I'm trying to scanning down here, and this is where I think somebody, one person might say, well, Hawaii has the best tax rate, which it does. But because the property values are so high, you're paying so much taxes, and you're kind of in the middle of the rung here. So I'm just kind of scanning down here, looking for some outliers. Oregon, very high taxes, not by percentage, but when you do this math between this number and the price value, you have a sort of moderately high tax amount. And this is because, there's no sales tax there, and that's how the state has chosen to get their revenue. In similar fashion, Washington State, one could say that the tax rate isn't that high at just under 1%, but because the price values are high, it comes out to about $3,000 per property. And at this point, Washington is known as one of those places where you don't have any income tax, so it's kind of desirable for people to go in. Now, also something to be thinking about for a lot of people who are kind of in the second half of their life who've built up wealth, they think of Washington as a good place to go to kind of, stretch their dollar, not paying income tax on it. So that means, if they've got more money, they're likely going to be buying a larger property, maybe more than $500 million. This tax value will be going up. You're not comparing the median home price anymore. $1 million won't really get you too much in Washington, but it'll get you a huge 6-10 bedroom mansion in Alabama. Another thing I'd like to mention, this is more for the more higher net worth investors out there, over $10 to $20 million. Might not be you guys out there, but Washington, is known as a place where people go to, again, take advantage of the low income tax as retirees, but where they get you is this estate tax. Their estate tax thresholds are a little bit lower, so they're going to tax your estate. But, if your guy's net worth is not $5, $10, $20 million, I wouldn't really worry about that stuff yet. But, if you're following a lot of the stuff that we're teaching on this channel, there's really no reason why your net worth shouldn't float up to those levels. And then now you're seeing, well, for kind of rich people, above, several $1 million, or maybe I should check the way I say that. But it's not quite the same. Like maybe if you're $1 to $5 million net worth, Washington might make a lot of sense. But if you go above that, then you're bringing in this estate tax thing. So if you're more of that higher end wealthy, then it may not be a good place for you. And that's why I bringing this stuff up, because there's no general rule to this stuff. There's always kind of levels, and depending where you're at, and also going back to the investment side is what kind of properties you're going to be buying. Well, you guys can go check out the Analyzer again at SimplePassiveCashflow.com/analyzer and play around with the numbers yourself. All right, well, that was today's discussion on taxes, and hopefully it was useful for you guys. If you guys have any other questions or things you see other people doing that come up, I'd like to put in my commentary. Let us know what you want us to talk about on this channel, but we'll see you guys next time.